This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Riley Smith.
Good day and welcome to Ag Matters PM from the Iowa Agribusiness Radio Network. I'm Riley Smith. Today is Friday, April 19th of 2024. We're so glad you can join us for today's show. In today's episode, I have the latest Iowa Ag News headlines, including an announcement from the EPA of the sale of summertime E15 at the pump. But first, let's take a look at the closing market prices.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net.
At the end of another trading day in the Ag Marketplace, we're here with Robin Schmahl of agmarket.net. First off, Robin, what do we see going on in the grains today?
Well, we found some nice strength in the grains. So we got some good buying interest came in. We did have some daily corn sales. 216,500 metric ton went to Mexico, and soybeans, 121,500 metric ton went to an unknown. Probably the bigger situation, maybe propelled the corn market a little bit more, as EPA will temporarily expand the sale of E15 through the summer. Now the summer driving season, now they've done that the past 2 years, but at least they're going to extend it again for another summer season. So that puts a little bit more support into that market. It's good to see. We're not getting any support from weather per se. Everything else is a little more, there's plenty of supply out there. Exports are kind of hanging in there. Nothing's really to trigger anything under that market. So this gives a little bit of a bump from the little downward movement we've seen. Nothing long term, but at least it increases some potential for some of our usage. Now, the International Grains Council, they did cut global forecast for corn production to 1.226 billion bushels. Now that was down 7 million bushel, 1.226 billion tons. It's down 7 million metric tons from their previous estimate last month, not bushels, but anyway, so they did a little bit of a cut in there. Again, nothing that's really going to light a fire under that market at this point in time. But it's something that we've been seeing a little bit of cuts happening, and they basically made the cut because of last year, a little bit lower production off of the U.S. side of the growing season. Now, Panama Canal, they're actually going to increase their allotment of ships going through there. The authorities there are increasing the amount to 31 ships per day. That's up 4 ships from what it has been doing. Things are shaping up a little bit better there, so they'll be able to move more goods through that region. Wheat got initial push too, got some strength because of the conflict over there, or the tensions between Israel and Iran, and that impacted or has some concern in the crude oil market. Metals were up because of that, and wheat was also up, or at least found some strength from that. So we don't know how that's all going to pan out there, but it does have some influence. Crude oil has some influence on the markets, the grain markets, agricultural markets, and so those kind of situations that are unknowns out there can also always provide some kind of support to the market, because they don't know what's going to happen as things progress. So it's not that we like to see things like that, but sometimes it's good to see some outside factors that come into these markets that at least give us some volatility that hopefully will move far enough so that producers can take some advantage of that volatility.
All right, Robin, and then on the other side of the ag marketplace, in the livestock complex, what do we see going on there to end the week off?
Well, cattle drifted lower, or I shouldn't say lower today. They just drifted today. We've got the cattle on feed report coming up, at 2 o'clock Central Time. Not a lot going on. There were more positioning for that. Now, we did see some cash trade in the north, just a little bit, the dollar lower than last week at 292 on the dress side. A few southern cattle traded at even money with last week, and that's been a surprise. There was some anticipation that we could see anywhere from $1 to $3 lower cash. Seeing the southern cattle, at least some of them trade at steady money, that's really good. And if we get a cattle on feed report that could be neutral to friendly, I think we'd probably see some strength again coming into next week. Cattle on feed report, their estimates are looking at on feed on April 1st at 102% from last year. Placements in March at 92.1% and marketings in March at 88.2%. Now, on the placement side, it's one of the tightest estimates we've seen for a while. The range of trade estimates anywhere from 90% to about 94.2%. We've seen some wide estimates all the while. So this is kind of a little more of a narrow range than what we've seen for quite some time. So anyway, whatever comes out, the market will trade relative to what the trade estimates are, even though placements would be lower than a year ago. And it comes in higher than that. It doesn't make any difference. That's what they trade, at least for a little period of time. We know the cattle market is tight, but it's all up to consumer demand. And really, most of this whole week, we've seen some pressure on the box beef prices, and that indicates maybe a little bit of slowing, more so of consumer demand. Now, box beef at midday today was up in both categories, up 13% in choice and up $1.80 in select. But even if we do see something a little bit higher, we're going to see some negativity from the whole week as far as box beef was concerned. On the hogs side of the equation, hogs found some support under the market today and pushed higher after really chopping around for much of the week. We really saw some strong gains today with triple-digit gains and some of the contracts over $2. Now, the cash market was down $1.80, which was kind of expected. We were going to see something lower because it was higher most of the week, showing some decent gains. Cutouts, though, at midday we're up $1.06. If we can maintain some positive cutouts, again, we're going to see some support under that market because we've seen some good demand. Overall demand has been good. That's been supporting that market. Recently, after the sell-off we had there, we did chop around here. Traders were unsure of which way to go. Maybe today's action is giving us an idea of which direction they want to go with that, because we've got strong slaughter pace that's been maintained. That indicates the good demand. Now, on exports yesterday, they were the marketing year low, but again, that's just a weekly export sales. We have to take everything into consideration, and overall, hogs have been higher slaughter, and pork movement has been good. Now, Saturday slaughter is expected to be at 62,000 head. So kind of low number, but it's they've been killing quite a few during the week. So Saturday is going to be a little more cleanup, but they're projecting at 62,000 head right now. So if we can see some positive stuff coming out of the cattle on feed report, if we can see cutouts stay stronger as far as the hogs are concerned, I think we're going to see a good start to next week.
All right, Robin, lots of great information today. For those of our listeners and our viewers who would like to get in touch and learn more from agmarket.net, how can they do that?
They can call me directly at 877-256-3253 or go to our website, agmarket.net. It's an 844 number there. They can call in and they will be able to reach someone.
All right, thank you so much for taking the time to visit with us today, Robin. We always appreciate having that analysis, and we look forward to visiting again soon.
All right, thank you, and have a great weekend.
That again was Robin Schmahl of agmarket.net. Let's take a look at how the numbers closed, courtesy of the market window at iowaagnet.com. At the close, May corn up 6 3/4 at $4.33 1/2. May soybeans up 16 1/4 at $11.50 1/2. May soybean meal up 5.70 at $3.43.70. Soybean oil up 26 cents at $44.38. Chicago wheat up 13 1/2 at $5.50 1/4. Kansas City hard red wheat up 4 1/4 at $5.81 1/2. Minneapolis spring wheat up 8 1/4 at $6.47 even. May oats up 4 even at $3.58 3/4. On the Merc, June live cattle up 30 cents at $175.67. May feeders down 55 at $2.42 even. May lean hogs up 150 at $96.22. May pork cutout went up 67 cents at $102.07. And May Class 3 milk up 47 cents at $17.85. And that's been a check of the markets here on Ag Matters PM. We're going to go ahead and take a quick break to hear from our sponsor, the Iowa Soybean Association and the Soy Checkoff. When we come back, I have the latest Iowa Ag News headlines. This is Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
Welcome back to Ag Matters PM on the Iowa Agribusiness Radio Network. I'm Riley Smith. Time now to take a look at the latest Iowa Ag News headlines. The emergency fuel waiver issued by the Environmental Protection Agency to allow sales of E15 this summer will help American consumers save money at the pump, while also cutting greenhouse gas emissions and harmful tailpipe pollution. But the Renewable Fuels Association says a permanent legislative solution is still necessary. The emergency waiver issued Friday follows a concerted effort by the RFA and its allies and will make the 6th year that some type of EPA action has allowed sales of 15% ethanol fuel in conventional gasoline areas during the summer. Iowa officials across the state have welcomed the news of a summertime waiver, but the consensus is clear that the EPA still needs to work on a permanent solution that keeps E15 at the pumps. In other news, beef and pork exports of $18.1 billion in 2023 had a significant impact on the corn and soybean industries, according to an independent study conducted by Dave Jude of the Jude Group and released by the U.S. Meat Export Federation. The study quantified the returns that beef and pork exports brought to corn and soybean products nationally and on a state-by-state level for leading corn and soybean producing states.
Red meat exports, that's both beef and pork, used about almost 513 million bushels of corn for feed. And if you take the calendar year average price in 2023 of $5.95, that's about $3.05 billion of corn purchases that were directly leveraged by red meat exports. We estimate that the value of red meat exports to a bushel of corn is about 87 cents. Additionally, those red meat exports also consumed about another 3 million tons of DDGs. And if you break that down into the net operating margin of an ethanol mill, that's almost 4 cents a gallon margin that is supported by red meat exports. So the economic multiplier is wide across the corn complex.
Jude said beef and pork exports accounted for 512.7 million bushels of U.S. corn usage.
If you take that 87 cents per bushel and apply that across the whole 2023 corn crop, that's going to total $13.35 billion of additional revenue to corn production that wouldn't be there if there wasn't the demand from the red meat exports.
Red meat exports also accounted for the consumption of about 3 million tons of dried distillers' grains, adding 4 cents per gallon to the net margin of ethanol plants. But Jude said that's not the only impact they had on soybeans.
Well, soybeans, we look at the impact of pork exports, and we convert the soybean meal to bushels. And the bushel equivalent to soybean meal consumed by hogs for pork exports is about 97 million bushels. And last year, the calendar year average price was about $14.07. So that would be $1.36 billion in value to soybean production. Pork exports in 2023 added about $1.95 per bushel value to soybeans, and $1.95 across 4.16 plus million acres. Adds up to about $8.12 billion to the value of soybeans in the U.S.
For more information, visit usmef.org. And finally, Iowa Secretary of Agriculture Mike Nag today applauded the Iowa Economic Development Authority Board's support of Daisy Brand's new dairy processing plant that will bring more than 250 jobs to Boone. Nag said, quote, "Daisy's announcement is good news for the city of Boone, the state of Iowa, and our state's dairy farmers. Daisy is joining an already impressive and well-established group of dairy processors in our state, and this new state-of-the-art sour cream and cottage cheese plant will provide Iowa's farmers with yet another good option to market their milk. Whether it's our investments in small-scale dairy processing through Choose Iowa or Iowa Economic Development Authority's significant support for this new plant, we welcome projects of all sizes. Consumers and farmers alike benefit from adding value to the commodities we produce, including milk. And as Secretary, I want to see our state continue to look for even more opportunities to build markets through additional processing capacity," end quote. And that's all the time we have for news headlines today. Thanks again for tuning in. You can find all of our content on our website at iowaagnet.com. Also follow us on social media at Facebook, X, LinkedIn, and TikTok, and find our video content as well as previous episodes of AM/PM on our YouTube channel. So make sure you subscribe and hit the notification bell to see when those videos go live. Don't forget as well our free Thrice Daily Market podcast on Apple, Amazon, Google, Spotify, and Podbean. From the Iowa Agribusiness Radio Network studios in Des Moines, I'm Riley Smith. On behalf of Mark Magnuson, Dustin Huffman, and Andy Peterson, we thank you for watching. This has been Ag Matters PM.